Alright, today I'm going to be going over this nice little winning short I took to make $550 today. Kind of my thought process, daily bias, why I took the trade, my thought process during the trade when I got into like a little bit of drawdown right here. So let's get straight into it. Okay, so bias coming into the day. First of all, what do we see, right? So Friday moved down significantly, around 5%, and we end up edging this weekly low, this weekly intermediate low, and we start to move back up overnight. So a lot of people with edging this low were bearish, but I actually was bullish because we are like 115 points away from that low. And if you look at it, we are actually in like an extreme bullish order flow. We're respecting these bullish gaps and we're disrespecting these bearish gaps, and we're also trading through these 4-hour gaps to the left like they don't even exist. So I'm treating these 4-hour gaps more of like an imbalance to fill other than a place to find price rejecting off of, right? So what I want to see, I just want to see price continue that bullish trend higher and higher and higher, ultimately filling all these 4 hours. All right, so what do we have? How am I going to see price do that, and what was my idea? So what do we have coming into open? Well, we have this extremely obvious hourly gap right here, and if price is truly bullish, I would want to see it ideally hold these more premium gaps right here, but at the same time I would be okay either shorting to this hourly gap or longing out of it, right? Because this is my agreed point draw on liquidity, meaning that like I'm pretty much okay targeting this no matter what or trading out of it. So this is kind of my condition for the day. This is where I want to see price mitigate and just kind of see what happens. On ES, same exact story, right? 4-hour, we pretty much create relative equal lows with this significant sell side down here, and then we start to move up, right? Market opens right here. Hourly, we can see ES doing the exact same thing, just kind of overnight sessions, kind of like accumulating a little bit, and then closer to New York open, we start to distribute up, kind of just disrespecting the gaps to the left. So same exact thing in ES. We had this big gap sitting right here in ES, this obvious gap, and then ES did not have those obvious premium 30-minute gaps, so we had this 15-minute intermediate low that I was just going to monitor price once we mitigated. All right, so coming in the day, the overall bias was I want to see price come down, either hold these 30-minute gaps or either hold this hourly gap right here and then move higher. So ideally I long off these gaps, but I was okay targeting one of these gaps if we got an entry towards them. So let's just hop straight into it. 1 minute market open, what do we do, right? So market opens up. What does 930 do? 930 generates liquidity above, so kind of just adding towards my bullish bias. 930 does not really manipulate into anything, but instead we leave this AM high up here, just generating this wick. And then we move down, we mitigate the more premium 30-minute gaps, right? So you can see right here, price moves down, mitigates both premium 30-minute gaps, and we trade through both of them, fully mitigating both. And on ES, you can see right here, we rip straight below these relative equal lows in this 15-minute intermediate low, and we mitigate this large hourly gap right here. So at this time, what structure looks like is ES could hold these more premium 30-minute gaps, and we could just boost off from here towards the upside, or we could see these 30-minute gaps get traded through completely, and we see some kind of internal rejection off like a sponsored 5-minute or 15-minute, and I get my short towards my overall condition for the day. So that is actually exactly what ended up happening today. If I play out price action, you can see here we start to accumulate a little bit. We end up running up pretty high, and we actually end up running into this 5-minute gap right here. We just barely inverse it. We leave this 5-minute intermediate high swing above. High. We leave that above. Now let's take a look at ES. What was ES doing at this time? Well, ES also had a 5-minute right here, the sponsored 5-minute. ES ends up sweeping out this 5-minute intermediate high. So we have an SMT at the intermediate high right there. And then price ends up just coming down, right? Now, this is when I ended up flipping bearish towards this hourly gap here, and I was kind of losing my focus on the bullish bias, right? Because if we look at the higher time frame, what is the higher time frame doing? Well, we are wicking out of this more like middle range, more EQ the range 4-hour gap, right? So we're overall holding this more discounted 4-hour right now, and both indexes are printing high time frame rejection wicks at that 4-hour. Now, what does this tell me? This tells me that after trading into those more premium 30-minute gaps, price did not find the rejection level needed to continue higher. So what should we do next? The only logical answer is go down, mitigate this huge obvious hourly gap to then move higher, right? So what I was looking for at this point was, well, we have this internal SMT. We delivered into that 5-minute gap right here. We held the 5-minute gap. ES takes out this intermediate high. And all I'm looking for now is an inversion towards the downside because we do have our low resistance liquidity and our AM low leading towards our higher time frame target, right? So this is a very low resistance target, high probability target down here. It's a magnet for price. So what do I see? I go to this manipulation leg. We have this 3-minute gap. All I'm doing is just waiting for NQ to inverse this 3-minute gap. And I'm kind of just looking at ES at the same time to see how ES closes. So you can see right here, we end up flipping this 3-minute gap with a good amount of volume. Boom, like that. I feel like a lot of people took this trade today. If you did not, or you just were not trading today, this was actually like the stop loss edge of the century. I got filled. I think it was like 458. Yeah, it was like 458. I got filled, and then I pretty much just targeted a 1-to-1 inside of this hourly gap. So you can see I entered about here on this up candle, and the trade actually immediately went into like tons of drawdown, but the SMT saved us. Guys, this is why you put your stop loss at the swing high. This is why I personally always have my stop at the swing high. I never have it at bodies because, like, you never know. Like, the way I like to think of it is, if you have your stop at the bodies, yeah, this gap could fail right here. This 1-minute gap did fail, but you have another line of protection being an SMT at this high. So if you're truly confident enough in your setup and we run through this 1 minute like we did today, well, then you could see it as, okay, maybe ES is a leading index higher. So ES is going to put in this SMT and then we deliver lower. So that's exactly what I was thinking. I actually ended up adding in over here. I think it was like around here. So I actually ended up adding in, and then you can see from here we just end up dumping down completely, taking out my target, and I get my take profit hit. So this is a very good trade in my opinion, and I'm really proud of the way that I kind of flipped my bias after realizing, oh, look at this. The higher time frame is printing a rejection wick out of this kind of like external of this daily range 4-hour gap. We're holding this more discounted 4-hour gap relative to this huge distribution leg. So it only makes sense for price to find a lower spot of rejection to then continue higher. And if I play out the market from the day, what do we do after mitigating that hourly gap? Well, we continue higher, right? I was completely correct in my entire idea for the market today, and I'm very proud of that. So that was my trade for the day. Join the Discord, link in bio, if you want to kind of see my journal and just talk about your trades.